Arcticzymes Technologies, approaching an inflection point. Okay, so a bit of a different company today. I have followed this company since 2020 when it traded at very elevated multiples due to strong COVID-19 sales. The company has fallen around 80% since all-time highs and now trades at a share price of 20 NOK. This equates to a market cap of roughly 1.05 billion NOK. Arcticzymes has experienced an incredible drawdown due to a collapse in fundamentals. I believe the company has now reached a new stage in their journey and that the company finally trades at a reasonable level. The company has fantastic gross margins and potential operating leverage, but has been mismanaged in recent years. With new management, changes at board level, and a new growth strategy, things are looking promising. The company sells enzymes used in biomanufacturing of vaccines and gene therapy, as well as molecular tools used for research and diagnostics. The gross margins are above 90%. Trading at around 6 times sales, the operating leverage will lead to strong increases in earnings and free cash flow if revenue grows at a stable clip. I believe a multiple of 10 times sales is warranted for the company, giving a potential upside of around 70%. In 2024 and 2025, Arcticzymes' income from operations were basically at break even. Operational costs are somewhere in line with the revenues. The company is primarily profitable due to interest income from the large cash position. Therefore, the company seems very expensive on an earnings basis, but today's earnings are irrelevant to the investment case. On a longer timeline, operating margins should track above 30% due to the incredible gross margins and low capex needs. At 10 times sales, 30% margins would give a PE multiple of 33. With a company with incredible scalability and stable revenue growth, this is a warranted multiple in my opinion. A 10 times sales multiple is further supported by M&A activities in the space. Still, I will be looking to own the company as long as revenue growth stabilizes above 10%, where a potential multiple expansion would add to the shareholder returns. So, the single important question that remains is, will revenue growth stabilize above 10% per annum? The company has struggled to grow for quite a while. This is not due to poor products or other companies outcompeting them. Plenty of Arcticzymes customers, especially within research, has had very difficult years with low funding, particularly within the United States. This has led to a decrease within the molecular tools space. This segment seems to have found a temporary bottom. Still, the molecular tools space is competitive and not where Arcticzymes' opportunities for strong and stable revenue growth lies. Arcticzymes has a strong market position within salt-active nucleases. With their MSAN HQ products, I believe the company can grow around 20% for many years with a high degree of stability and predictability. For quite some time, Arcticzymes has not been able to capitalize on the opportunities this product category presents. Despite having a strong product, the commercialization efforts from management has been lackluster. Plenty of changes has happened here since 2022, and belief in the new management is needed in order to invest in the company. The primary risk in this company lies within execution from management. Arcticzymes employed the current CEO in September 2023. In 2024, the company delivered very disappointing growth, leading to doubts over the new CEO. This has led to a new strategy within the commercialization of the company. The Chief Commercial Officer, Paul Blackburn, started in September 2024. Just like the current CEO, Blackburn experienced a tough start to his tenure. The first couple of quarters after he started was disappointing. So, why should the poor starts to the tenures of both the CEO and CCO give me confidence in the future for the company? Well, underlying things are moving in the right direction. The company is trying to broaden the customer base and establish long-lasting relationships, starting from the point of research and all the way up to a commercial product. In my view, this is the right strategy as it leads to more predictable growth rather than lumpy quarters depending on large one-time purchases from key customers. In 2026, things are looking like they have turned a corner. In Q1, the company grew sales 36% despite strong currency headwinds. The sales growth was boosted due to a weak Q1 in 2025 for molecular tools. More importantly, biomanufacturing, the most important segment long term, grew 11%. The recent Q2 report continued the positive momentum. Sales revenue was strong once again, growing 19%, but 29% currency adjusted. The biomanufacturing segment had yet another strong quarter with growth quarter on quarter. Revenue growth for this segment was down year over year due to a very strong Q2 2025. Overall, the trends are looking strong, but the market is still quite reluctant to bid up the company towards a higher multiple. I believe the company has reached an inflection point. I have never owned shares in the company due to high multiples and a lack of belief in previous management. In addition to a poor ownership structure, I have always had too many problems with the company, despite the enormous long-term potential. To me, it seems like the commercial efforts from the CEO and CCO are bearing fruit. The setup for potential investors is quite compelling. Growing from a low base, revenues should be able to grow double digits for many years. The sales multiple is at 5 times forward-looking if you adjust the market cap for the huge cash position. The risk for permanent capital loss is limited. With gross margins above 90%, a 5 times sales multiple is warranted, and I deem the risks of multiple compression to be very low at these levels. I believe the market needs more consecutive quarters of solid performance before believing in the company and the management once again. Having traded poorly for 5 years, many individual investors has given up on the name. I believe the setup is great for long-term investors and that the risk-reward is asymmetrical. I will be looking to buy shares in the company around 20 NOK per share, but do not currently own shares in the company. This is not financial advice. Thanks for listening.